Alright guys, welcome to the next video. This one is going to be on drawing supply and demand zones on actual charts, kind of how to draw them, what they look like, etc. So let's go ahead and dive right into this one. So the first thing I want to mention is that drawing zones on the charts, they work on all time frames, right? So whether it's a monthly, weekly, daily, hourly, even up to the 1 minute, it will work on all time frames, right? And looking at which time frame you want to look at depends on a number of factors. That's something that can be discussed in a future video. So let's go ahead and get started. There's really 3 steps when it comes to drawing zones on the charts. First one is going to be, identifying the base of the explosive move, so where the actual consolidation is, where the supply and demand zone is. You're going to draw a zone from the base, and then you can use the wick or the body, and I'll get right into that in a second. So right here, you can see we have a drop, base, rally, right? So let's just assume this is very fast price action here. We have, drop, we have a small 2 candle base, a little consolidation here, and then a huge move higher, right? So where you want to draw is identify the base right before the explosive move, right? So this is the explosive move, right? This candle here. So we're going to go to the candle right before it, which is this green candle here, okay? And we're just going to draw a zone, right? So we're going to take that candle from the high of the wick down to the low of the wick. Let me make that gray. And that's going to be our demand zone. We'd extend that. And then as price goes back into it, we would expect to bounce out of that zone, okay? A big misconception that people think is that, if we have a demand zone, a big green zone, it has to be a red candle. You have to draw your zone based off the red candle. That's just simply not true. It doesn't matter what candle is. You just want to identify where the real base is, and you want to draw your zone right before the huge move, okay? Because that's where all the unfilled orders are going to be. Now you see in number 3, I say can use wick or body, right? What do I mean by that? So in the last candle, I went from the high of the wick to the low of the wick. Sometimes what you can do is use the body. It depends on a number of factors. So I'll use them interchangeably. It kind of just comes down to personal preference and what works better for you. But the body would just be the top of the body. You still want to go down to the bottom of the wick, right? So one thing that's important to keep in mind for demand zones, you want to always go down to the bottom of the wick, okay? You don't necessarily have to be the top of the wick, but the bottom of the wick. Vice versa for supply zones, you always want to go to the top of the wick, okay? You want to encapsulate the entire bottom of that move, right? If that makes sense. So that's how I draw my zone. So you just take it from the top of the body, and then you could use your zone just like that. Price comes down, expect to bounce out of it, right? Supply zone, right? So this would be a drop, base, drop. So these consolidation or zones can happen in a matter of one candle, right? So a lot of times, if you can see, price comes down, it can have a 1 candle consolidation and then continue dropping, right? As long as we see that fast price action, move this down here, you see a nice explosive move lower, you can draw your supply zone right from this candle, right? So we go from the low to the high of that candle. This is the candle right before the explosive move, and extend it out. And then as price comes back up, we would look to short in this area, targeting move lower, right? And again, if you want, you could also go from the body. So that would be right there, the body, and then you have a little bit of a smaller zone for a better risk reward. So that's basically how it goes, how you draw them. We're going to look at some real examples right now. The first one actually being on Zoom. So right now I have the weekly chart pulled up. So you can see here, I can even look at the monthly if I wanted to. Actually, yeah, why don't we look at the monthly? So monthly we have huge move, right? So we have a huge rally. We have a 1 candle base. And we have a huge move higher, right? We have another rally right after it. So this little consolidation, this monthly candle, which on the weekly, has this big consolidation area right here. You can see price makes that rally, it bases, consolidates, and we have that huge move higher, right? That's your rally-based rally zone. So if we go on the monthly, we go from the top of the body, or top of the candle before it, down all the way to the bottom, And if the bottom of the explosive move candle ends up going lower than the candle before it, in this example here, you want to go always down to the bottom, right? So you want to find that explosive move, and you always want to start from the bottom of that explosive move, okay? So go back to the monthly. It would just be like that, and then we draw that zone out. And you can see price came back in, tapped the top of the zone, and then ended up going all the way back up to 405. If we look at the weekly, it's a little bit easier to see. You know, we have this big kind of zone here, ended up going higher, came back down, tested it, and then had a nice bounce, right? So there's a few things to mention here, right? First one, you can see price actually had a mini rally-based rally zone inside this zone, right? So price has a rally, we have this one candle consolidation here, and then another rally higher. So we could even draw a weekly zone right here from the top to the bottom. And you can see price ended up breaking it below here, but before it, price tapped the top of that zone right here and then ended up bouncing up to 344, right? So it's still a nice bounce from that zone. You can see another supply zone here, looking at the weekly. Let me just extend that out. You see price drops. We have that one candle base, drops even more, fast price action. We came back, tested it, and then went all the way lower, right? You could easily see another one right here. If we draw this zone just like that, price comes down. We have that one candle base, huge fast move down. Remember, speed is everything. Fast move down, this would be our supply zone. So if price wanted to and we saw it came back up, I would be interested in shorting in this zone for a move lower. So that's zoom. Let's take a look at TTD. Beautiful move here on TTD. You can see price again. There's actually another zone here that I just saw off the top of my head. Right down here. So I draw this out just like that. Price has this consolidation period. We have the little consolidation here, and then we have that fast move higher. Look at the candle right before the fast move, draw your zone, and we get a nice bounce there. Same thing right here. If I go to my path, we go up, we rally, we have a little base, we rally even higher. This one I took from the top of the body down to the lows. Price came back in, bounced all the way up to $80, right? From low of 57, right? So overall, you can get some very good moves. Again, supply, rally base drop, price rallied. We have that one candle base, that fast price action, fast move drop. We come here, we tap it just to the tip, and then end up dumping. So that would be TTD. CRM, right here, right? So ignore this for a second. If you look here, right here, say we have very slow action, prices kind of grinding up, pullbacks, up, very slow grind, and we have this huge fast move, right? If I pull that up, this is what that looks like. We have the slow grind and the fast move. So if you remember, we want to look at the fast move. That's where the supply and demand and institutional activity is. So we take the candle right before that big move, which would be right here, extend it out. You can see price came to it, bounced, ended up going all the way higher up to 310. Again, even intra week, right? Price moves higher. We have that base, topping candle, and then fast move down, right? That caused supply. Price came up to supply. And it didn't have a big move, right? We look at supply here. We kind of tapped it and then moved a little bit lower back into this demand. Ended up moving higher. And looking back at the weekly, so let me get rid of some of these zones. We have another demand zone, right? Price bounces off demand. I could draw it from the base right here. We have this explosive move higher, with the move starts here, comes back, bounces, very clean move off of that. Take a look at Etsy. I think I only drew one example down here. Looks like it's on the daily. Yep. So we have the one example here. Price, drops, has a base, has earnings, makes a huge move higher, comes back down, and then bounces out of that zone. So I just took it from the top of the body, came back down, very nice move. Take a look at Boeing. Few examples here. One thing that I wanted to mention as well is gaps. Anytime you see a gap with stocks, that also is going to work as very good zones, because gaps are the fastest price action, right? It technically happens overnight, and it's very, very fast price action. So you can see we gap down. We have a strong move down all the way down to 190, right? From 230 to 190 in a matter of, maybe 2 weeks. Price comes back up, tests that daily demand zone, right? This is the candle right before the huge drop. Comes back down, tests it, end up going way lower. Right here, price comes up, comes back down. We have that one candle base, huge fast move lower, right? So if you look again, such a fast move because of nice efficiency. This is where the move started. So you took it from the base, from the low of this candle to the high, end up tapping it and then moving all the way lower. We end up forming another supply zone out of that reaction, right? So we come down slow price action, and then here fast price action, right? So this move starts right here. We can take it from the body, taps it right to the tick. We could also take it from here. If we look at the low, right from there, the low of that candle, which is the candle before the move, and it ends up going lower again. So hopefully this cleared thing up for you guys and it makes a little more sense. Again, gaps also work, so you can look at very fast price action, and that will work as well. Overall, these are the kind of the rules I use, the basic guidelines I use. So hopefully you guys enjoyed and learned from this video, and I will see you all in the next one.